In 2021, China banned Bitcoin. Not for the first time, they'd actually banned it multiple times before, but this time they meant it. They shut down every mining operation in the country. They made it illegal for banks to process any crypto transactions. They deployed the full weight of an authoritarian surveillance state to crush it. And what happened? The Bitcoin network didn't skip a beat. Not one block was missed. Within months, miners had relocated to the United States, Kazakhstan, Canada, and a dozen other countries. The hash rate, the total computing power securing the network, recovered to all-time highs. China spent years trying to kill Bitcoin, and all they accomplished was giving away their share of the mining industry. Welcome to Exit Velocity. Last episode, we talked about how to actually start saving in Bitcoin. Dollar cost averaging, Bitcoin, not crypto, self-custody, the practical playbook. But if you're anything like most people I talk to, there's a voice in the back of your head saying, yeah, but what if the government just bans it? It's a fair question, and today we're going to answer it, not with theory, but with history, because governments have tried to ban Bitcoin many times in many countries, and the track record speaks for itself. Let's start with what banning Bitcoin actually means, because most people haven't thought this through. Bitcoin is not a company. There's no CEO to arrest. There's no server to shut down. There's no headquarters to raid. Bitcoin is an open source protocol running on tens of thousands of computers spread across every continent on Earth. It's a set of math rules that anyone with an internet connection can participate in. Banning Bitcoin is more like banning an idea than banning a product. You can make it illegal to use. You can threaten people with fines or jail time, but you cannot turn it off. You cannot stop the network from running. The only thing you can do is push it underground, and even that has limits. Let's look at the history. China is the most dramatic example, but it's far from the only one. India threatened a complete ban in 2018 and proposed jail time for anyone holding crypto. The Supreme Court struck it down. The government reversed course and now taxes crypto transactions instead. Nigeria banned banks from servicing crypto exchanges in 2021. And Nigeria immediately became one of the highest peer-to-peer Bitcoin trading markets in the world. People just routed around the ban. Bolivia banned it, Ecuador banned it, Nepal banned it, Bangladesh banned it. And in every single case, people kept using Bitcoin, peer-to-peer, through VPNs, through mesh networks, through the simple reality that when you have 12 words in your head, your recovery phrase, you are carrying a borderless, unseizable savings account that no government on earth can detect. Now let's talk about the United States, because that's what most of my listeners care about. Can the US ban Bitcoin? Technically, Congress could pass a law making it illegal to buy, sell, or hold Bitcoin. But here's the reality of where we are in 2026. Bitcoin ETFs hold hundreds of billions of dollars in assets. Major financial institutions, BlackRock, Fidelity, Schwab, offer Bitcoin products. Public companies hold Bitcoin on their balance sheets. MicroStrategy alone holds over 200,000 Bitcoin. The state of Wisconsin pension fund bought Bitcoin ETFs. Texas is mining Bitcoin with state energy resources. Bitcoin is no longer some fringe internet experiment. It is embedded in the American financial system. Banning it now would mean wiping out hundreds of billions in American-held assets. It would mean telling BlackRock and Fidelity that their products are illegal. It would mean pension funds taking massive losses. It would be the equivalent of banning gold in the digital age. And even when Roosevelt tried that in 1933, it didn't actually work. People just hid their gold. And here's the game theory that makes a ban even less likely. If the United States bans Bitcoin, it doesn't disappear. It just moves. The mining moves overseas, the innovation moves overseas, the capital moves overseas. Every country that wants to attract investment and talent has an incentive to be Bitcoin friendly, and they know it. El Salvador made Bitcoin legal tender. Switzerland built an entire crypto valley. The UAE and Singapore are racing to be Bitcoin hubs. A US ban wouldn't kill Bitcoin. It would just guarantee that America loses the race. Politicians understand this. That's why the conversation in Washington has shifted from should we ban it to how should we regulate it. Both parties have introduced Bitcoin-friendly legislation. The regulatory framework is being built around Bitcoin, not against it. You don't build regulations for something you're planning to ban. But let's say I'm wrong. Let's say some future government does try to ban it. What happens to your Bitcoin? Nothing. That's the beauty of self-custody. If you hold your own keys, if your Bitcoin is on a hardware wallet or backed up with a recovery phrase, no one can take it from you without physically finding those keys. Your Bitcoin exists on the blockchain, which is replicated across thousands of computers worldwide. A government can make it illegal to use. They cannot make it disappear. During the China ban, Chinese Bitcoin holders who had self-custody didn't lose a single Satoshi. They still had their Bitcoin. Some moved abroad, some waited, some used peer-to-peer markets, but their wealth was intact because no government decree can alter the Bitcoin ledger. Compare that to what governments can do with your bank account. They can freeze it, they can seize it, they can inflate away its value, they can impose capital controls that prevent you from moving your own money. We saw this in Canada in 2022 when the government froze bank accounts of people who donated to a protest. We've seen it in Greece, Cyprus, Argentina, Lebanon. Anywhere there's a financial crisis, the government's first move is to lock people out of their own money. Bitcoin is the first asset in history where that's not possible, not because of any law or policy, but because of mathematics. The protocol doesn't care what any government says, it just keeps producing blocks every 10 minutes, same as it has since January 3rd, 2009. There's an old saying in the Bitcoin community: you don't ban Bitcoin, Bitcoin bans you. And what they mean is the countries that try to suppress it don't hurt Bitcoin. They hurt themselves. They lose the mining revenue. They lose the tax revenue. They lose the developers, the entrepreneurs, the investment. They push their citizens toward peer to peer markets that are even harder to monitor. And meanwhile, the countries that embrace it attract all of that talent and capital. This is why the ban question, while understandable, is looking at it backwards. The real question isn't whether governments can ban Bitcoin. The real question is whether they can afford to. And increasingly, the answer is no. The incentives are aligned for adoption, not prohibition. Every year, more institutions hold it, more citizens hold it, more politicians understand it. The window for a ban, if it ever existed, is closing fast. So if you've been sitting on the sidelines because you're worried about a ban, I'd ask you to look at the evidence. 17 years of operation, dozens of attempted bans across the world, and the network is stronger today than it has ever been. More hash rate, more nodes, more users, more institutional adoption. Every attack has made it more resilient, more decentralized, more anti-fragile. That's not a system that's going to be banned out of existence. That's a system that's winning. Now, we've covered why your money is broken, why your house isn't real savings, why your retirement account is an illusion, how to start saving in Bitcoin, and why governments can't stop it. Next episode, we're going to tackle the other big objection people throw at Bitcoin: energy. Doesn't Bitcoin waste electricity? Spoiler, no, and the real answer might surprise you. Until then, think in Bitcoin.